Good afternoon and welcome everyone to the Uncensored live Q&A session, our trading talk. My name is Danny and I will give you the webinar today. Before we will begin, I would like us to go through a quick sound check just to make sure that everything is okay. And of course, the visibility of this screen, that you can see the presentation presented on the screen. Feel free to use the question section to confirm to me that the sound is okay for you, and then we can carry on with ease. At the same time, I'm going to show you what is the structure of the webinar. Okay, we're going to go through and understand what is happening in every part. Just a quick check. Okay, it sounds on my end, it sounds great. All right, so to open the webinar, we will have the previous questions that our team has prepared. It can be found in here. We're going to go through those questions and see how we can best answer on them. And then the dynamic questions, which is the true purpose of this webinar, is the live questions and answers, giving you guys the ability to put down whatever questions you have. As you can see, you have the question section. You can just write down whatever question you have in mind, and we will paste it down here. Again, going through those questions and trying to give the best answers possible. The third part, the links, information, and privileges, is basically that. And it's simply to save you the trouble to find those things by yourself on the website. Even though some things here already has a shortcut for you to get to, still some people don't use this interface, which is a shame because it's great. But still, for those people, you can have a link here and just go there directly. That bit here is just to help us emphasize how analysis approach are. We're not, unless we're going to be covering analysis with the questions, even though I don't identify anything related to analysis, but we'll see how we are going to go with the time. All right, and it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Okay, so beside that, I would like to tell you guys that the webinar is recorded. So even if you've missed a part or you had to go, still you can review the webinar on YouTube. You could just go to our YouTube channel by going to YouTube, put down AvaTrade, and then finding our channel with all the library, with the library with all the videos, recorded videos for you to review later on. So I'm going to go for a few moments just to make sure that the facilities are, everything is okay, and then I'll be back and we will begin. So I'll be right back. Thank you very much. All right, let's hit the road. Everything seems okay. Like I said, I'm Daniel. This is the Trading Talk Uncensored live Q&A session, and we can finally begin. Let's review the questions and then we can see how we can answer them the best way. All right, the first question is it possible to trade without leverage? Okay, the answer is of course yes, but okay, we'll get to that. How to manage risk money management? Okay, great. Do we pay deposits or withdrawals commissions with AvaTrade? The answer to that is no, but again, we'll get to, sorry, I've done something. Is it possible to learn trading by yourself? Okay, so we have here yes. Okay, we'll solve this very soon. No for this and yes for that. Let's pick the first one, paste it in our notepad. And hopefully this way, let's go to the chart. This, by the way, is called a web trader. I'm not going to expand too much, just going to tell you it's very, very informative platform that allows you to simulate certain things, allowing you, assisting you constructing a position with certain logic. Okay, so for people who know, take profit is an automatic price I can design to stop my position, closing it with a profit. So in here, it's showing me the possible profit that I can gain. In here, via the stop loss. So this is also a price that I can design, and then it stops the position with a loss. Okay, and this is what I can gain. This is what I can lose from that. Again, so this stops my position automatically with a profit. So this is how much I can gain. This stops my position with a loss. So this is how much I can lose. And with the plus and a minus, if I click on the plus, basically expanding the price here, okay, it's not really efficient, but I can increase in here to 0.2 is an example, and then I get the stop loss closer to the entry, okay, because we are with a buy. You can see when we are with a buy, our intention is that the value will increase. So of course, if I increase the value in here, that means that the stop loss will get closer onto the entry, and then I can minimize the possible loss. And of course, same apply with the take profit, that I can expand it to make more profits. I can get it closer to minimize my potential profit. Okay, and the question is, how is it possible to trade without leverage? Okay, let's first understand what is leverage. I'm just going to first answer yes. Okay, however, this platform in here, what I'm showing you is CFDs, is contract for difference. However, trading with AvaTrade CFDs, okay, or contract for difference, means that the leverage is built in the account. And as you can see, I didn't do anything to have the leverage here 1 to 20. It's based on the regulation that your account is registered with. Of course, if I have a certain request for my leverage, I can contact my senior account manager, and he can assist me with my request. Okay, but by default, we have the leverage in the system. Now, what does that mean? The leverage, how do we use it? And as you saw that I wrote here the answer to this question, is it possible to trade without leverage? And the answer is yes. Now, in this interface, I don't have the ability to turn off the leverage. Okay, I'm just going to explain to you how the leverage works, and you will understand that you can trade with the leverage, but not depending on the leverage. Okay, I will, as we go more into depths, we will understand the meaning of what I said. All right, this is just a currency that I had by default, but I think it's more appropriate to pick something by hand. So let's go to maybe how is oil looking these days. Very, very interesting. For those who are seeing the news, and remember that a little more than a year ago, a barrel used to be 120, and during COVID, okay, I don't want to get into that, but oil is definitely looking quite interesting, and that's great for today's session. Just going to place a few things that hopefully let us estimate the situation going on here. Okay. And now, when I'm looking at oil, and I understand that the question here is it possible to trade without leverage? First, I need to understand what leverage means and how do we use it, so we would know if it's possible not to use it, or maybe not to rely on it, because we've understood already that it's part of the system. Yeah, so the first thing that I'm going to do is I'm going to put down the price that we see here presented to the right, which is the buy price since we are currently buying. Okay, the second thing that I'm going to do is I'm going to put the load size here to 0.01, okay, which is the default. By default, this is the minimum position size that I can take. Okay, so 0.01, which means 10 barrels, okay, or units. And the next thing that I'm going to put down is the value of how much it's worth. So the value is 684.7, okay, which is an interpretation between the amount of units that I acquire to the price that I have. Therefore, 68.49 times 10 equals that. Okay, you don't have to do the calculations that I'm making here, since it's automatically presented here under value. And this is one of the things that I said in the beginning, that if you are not using this interface, you'll have to do this manually to understand what I'm explaining. It's basically the reason. There is a question here. Can you do trailing stop losses? Also use DTA alerting using AvaGo. I think that now AvaGo is called the trading app. And this is also, thank you so much for reminding me that, because I wanted to also say that this is the desktop version. This is the desktop version, which means that the app, we also have an app. It's gonna look a bit different, but you also get this type of information. So it should be fine for the people using the app. First of all, thank you for your question. Mr. Steven, we're just going to quickly take your question. If it only lets me, there we go. Hopefully, okay. All right. Now, let's get to that in a bit. But let's first focus on what we have here so we don't lose the scope. All right, so far we've understood that 1 unit costs 68.47. We understood that by default we have 10, which is 0.01. Okay, who can tell me how come this is 0.01, but we have 10 units? Wasn't this supposed to be 1 along with the load size? So how come we have, who knows the answer for that? Who knows how is it possible that I have 0.01 with a load size and the amount of units showing me 10? Because I would expect this to be the same, right? The reason is, guys, very good, Frank. The reason is load size equals to 1,000. So that means that this percentage here acknowledges the load size. So if I will go to instrument details and I scroll down, I don't even have to scroll down. You see, load size equals to 1,000. There is a shorter way to that. There is a shorter way, even a fastest way to do that. All I have to do is just go back to the order entry. In the order entry where it says lot, I'm just going to place 1, and it's going to tell me 1 equals to 1,000. Therefore, 0.1 equals to 100, and 0.01, which is 1% of 1,000, equals to 10. Okay. Why was that important for me to explain it to you guys now? Because when I do this and I have 10 units, my value is going to be 10 times as much as the price. Yeah? Does this make sense? This is 1 unit. This is 10 units. Very good. Now, the leverage, which we are getting into right now, is 1 to 10. What does that mean? It means that I have the strength to take 10 times higher with crude oil as if I couldn't have with leverage. So with the same logic, I can divide the value by the leverage because I multiply it by 10, right? Let me put that down. Let me put that down just quickly here. So with the same logic, I can just divide the value by 10, and then I know how much is necessary for me to take the position. Very, very simple. So we have here value divided by leverage equals margin impact, necessary amount to open the position. Now, is it possible to trade without leverage? No, because it's in the system. But I wrote here yes. The reason is this is how much the position here cost me, right? 685. But that's not entirely true because I have leverage. So this is the actual amount that I need available in margin. Meaning, if I have this amount in my account, I'm using the leverage, but I'm not depending on the leverage. Okay? I'll also give you a piece of advice. Having leverage might be great because again I can take more considerable position that I couldn't have with leverage, okay, but I wouldn't rely on it because I need to maintain a certain level of margin because I don't want to, who knows what happens when I don't have enough margin. If my margin level drops below what I'm supposed to, okay, let's suppose 50 or 30%, depending on the leverage. What will happen is my position will be closed, right? Because I need enough margin to also sustain the position. The fact that I have here, I need 68, so that doesn't mean that I'll have enough margin to also carry on with the position, right? I also need to maintain this margin to be available, right? I hope it makes sense. Now, this is the simple answer. The leverage is built in the system. We don't have to rely. We've already understood. Well, we have 10,000, so of course, we're not depending on leverage for this case. Of course, I don't have a choice here to go by the value. I'm going to go by the margin impact, and this is what I'm actually going to use and not that, even if I have a higher balance. Okay, but again, it helps me to maneuver and I don't have to rely on the leverage. I hope it makes sense. Do we have any questions before we proceed to the next question? Any questions or something that doesn't make sense? Great. In this case, let's pack everything in here. Quickly go into our presentation. Paste it down like that. Let's maybe split that. Okay. And then we can keep it at a nice level. And we have space for the answers as the other answers as well. Right. So how to manage the how to manage risk money management, right? This is written a bit differently, right? Yeah, well, okay, we'll take it as it is. So how to manage risk money management? First of all, I need to determine my risk, right? How to manage risk money management? What is risk money management, right? Having the ability to manage the risk on the account and on the positions, right? In other words, when I'm opening a position, as much as I can make profits, I can also lose, right? Now, unless I'm using the interface in here, again, if I'm using MT4 or MT5, we have to understand that I'm not going to be able to anticipate just like it's presented here what I can lose and to measure my exposure and my risk factor. Okay, but I'm going to show you now ways to understand how to do it manually, and of course to adjust it. Okay, so let's carry on with oil here. We understand that the price is 68.5. Perhaps, okay, let's start from scratch. So to design this position, I'm going to use the method with TTMU, target time movements in units. Okay, and what I'm going to do next is I'm going to apply an ATR that will help me estimate if I'm at the right place. Actually, I don't have to do that since we're just demonstrating here the risk money management, how it can be controlled through the stop loss. Okay, just to recap, what this does is it stops automatically the position, the price that I choose. So for instance, if I'm choosing with 10, every dollar here is going to give me 10, right? It means that if I'm holding 10 barrels and when I'm buying, my stop loss is going to be exactly $1 down. So that means, okay, let's get rid of that from now. All right, so if I go like this, that means that, let's paint it in red as well, just to understand. Okay, so if it gets, basically, if it gets to the red line, if it goes down to the red line, I'm going to potentially lose $10. How so? Because I have 10 units and it goes down $1. And for every barrel that I hold, I can gain every dollar $1 or lose $1. Meaning, when I'm buying 10, every dollar is going to worth 10. Every dollar on the chart. Dollar higher, I make 10. $2 higher, I make 20. $3 higher, I make 30, and so on and so on. With this understanding, I can put down here very simply units times movements equals potential profit or loss. And now, if I set myself a target, let's suppose that the target here is, since I have 10,000 and I'd like to have round numbers, let's suppose that the target is 500. Okay, for profit or loss, we're going to use 1-to-1 ratio. Time here is irrelevant. I'm just going to go for 1 day because we're at 1 day, so it's the same validity. The daily, the movement that we are expecting for here is $1, as we presented in here. It's just randomly a price that I picked. Of course, you can apply an ATR, moving averages, or any other RSI or Bollinger Bands to have measurements of what we expect in terms of support and resistance. Okay, and this way you can better measure where to aim your entry and the rest of your positions. Okay, but we're not there. I'm just trying to answer the question here, but at the same time to also give you maybe useful tips, practical useful tips for you to improve. Okay, so we have 10 units. So we're going to put down here 10 units. And using the formula here, we have 10 times 1 equals 10. Therefore, when the stop loss is farther away, $1 from where we are at right now, which is 68.5. Okay, that means 68.5 to 67.5 equals $1. And with this logic, I can understand that if I'm willing to expose 500 if I'm planning also to make 500, and I'm looking just for a $1 movement, I need 500 units, right? And in here, we're going to keep it the same level. We're going to just to really, we don't have to do that, but just to understand how it works, right? So you can see this is also $1 higher, so it would make sense to make or lose a similar amount. All right, now how do we control? We have this situation, we've understood how it's constructed, we understood the logic. How do we maintain, how do we manage the risk in this position onto our account, and then later on the rest of our the other positions that we have, basically? Of course, simply using the stop loss here gives us the ability to measure, to estimate what can be the possible loss. And we've understood prior that if I click here on the plus, I get with the buy, right? If I get the stop loss closer to the entry, I can minimize the loss here, right? Let's try that. I click on the plus, watch how it goes down, click on the plus. Okay, the reason that it's going down is because I'm getting the stop loss closer to the entry, right? And that's one way to modify that. Now, how do we know how much this? Let's suppose that we work with percentage. Okay, I've put down here 500, but let's suppose you want to target all right, so how do we know how much this is out of 10,000 in percentages? What we can easily do is we can divide potential loss by the balance, okay, which equals X. And then to take the X times 100 equals exposure. I could also, in advance, just take my interval and add another 0.01, sorry, 0.0 onto the actual figure, but it might make things complicated, so I'd rather just keep it as it is. And with this formula, we're going to simply divide the possible loss within here by the balance, okay, which is again 500 divided by 10,000 equals 0.05. Okay, we already know that this is 5%. Let's make it times 100, same way that it's written here. And then we have 5% exposure. Right, great. Now, how do we make it 2.5? Right? How do we adjust 5% to 2.5%? Anybody has any idea how to make this 5%? Let's suppose I'm a conservative trader and I want to keep it at 2.5. I think 5 is not really suitable. How do I make it from 5 to 2.5? So this position will only be exposed 2.5 out of my account and not 5. Anybody has any idea? Click on the plus and make the stop loss higher. Well, Christina, it seems like you've listened very good. Right, so Christina gave us the solution. We can click on the plus, right? But clicking on the plus is it's great. It's one way. You see, I can click on the plus. I can keep clicking on the plus until I get to 2.5%. Well, with basic understanding, if 500 is 5%, then 250 is 2.5%, right? But what I could also do in advance is, because I understand that the length here is $1 from entry to stop loss, I can just take it down by half, right? And instead of 67.5, I can just go 67, right? Sorry, 68, which is instead of, oh, because it's keeps on moving, and that jams our. I'm gonna explain what I did here because I wanted to keep it stable and not bouncy, right? And as you can see, 250, right? What I did here, if I disable it, you see it's moving things. This is no longer 67.5. It became something else. The reason is because the market is moving and the price is changing. The results here has to change as well, right? So what can I do to stick the price into one thing, because I want to analyze the position one time. I don't want to analyze it and then the market is shifting and then I have to compose it again. It's very inconvenient. So what can I do to keep it stable? I'm using something called execute when price hits. And this is another great ability to just stick the price into a certain price that you're aiming to buy. Are we with a buy? Okay, and then what will happen is when the market that gets back, okay, to the price that you were aiming for, it's gonna launch it where you ask, and not now at the new price, because you see where when we started, it was 20 cents higher. It was 20 cents higher, and based on that, we placed the stop loss and the take profit. So this 20 cents makes a difference in my take profit and stop loss. Okay, I don't want to delay too much about that because the point of this question is to do the risk money management, right? So to do the risk money management, this is a great ability to measure what can be the possible loss, what can be the exposure, how to modify the exposure. So basically to extend the stop loss further down means I'm going to have bigger loss, but I'll have more room to fluctuate before getting to the stop loss. And to get it closer means that my percentage goes down, my possible loss goes down, but that means that the stop loss is getting higher, giving me less place to maneuver, okay, until from the entry. I hope it makes sense. All right, let's pack all of what we have here. Oh, what I wanted to say before we carry on with this one. First of all, do we have any questions about that? Anything about the formula, anything about the process? Is this only for, no. Evelyn, thank you for the question. So Evelyn, you're asking if this is for oil. The answer is no. The answer is this will work with any other asset on the platform. Okay? You can apply the same principles that I've written here. It's not only for oil. You can do it with any other asset. Should work just fine. All right. And you can contact your senior account manager if you need further assistance. They can definitely teach you that as well. All right, let's carry on with ease. We're simply going to take what we have here at the top, pack it, and paste it down here. Oh, okay, that looks a bit different. We have to unify some things here. I think that I've made a big mess. Let's see if we can get this one smaller like that, and then okay. I know that this makes less sense like that, but I need to, at least I'm trying to have it all in the presentation, as you guys know. So later on, if you see that, it gets easier to understand. And I'm not sure if I'm succeeding or I'm making a bigger mess. All right, but again, it's on YouTube. You can watch it from A to Z. Let's take that one as well. Oh, what I wanted to say regarding the exposure. So when you were taking one position and you modified it to 2.5, which is great, don't forget that the more positions you'll take, as much as you can make more profits, you'll also increase your exposure ratio. And with that, 2.5 is only for one position. Therefore, if you're taking 10 similar positions, you're already at 25 for your account exposure and not 2.5 for a single exposure for that position. I hope it makes sense. And let's answer that one. That is the question with the fees, right? Do we with the commissions? So the answer is, I don't even need the chart for that, guys. I'm just gonna tell you that you don't pay the commissions, okay, for deposits and withdrawals. But I'm gonna put it this way: AvaTrade is not charging deposits or withdrawals commissions. However, the bank you're using or the paying method you're using might take a commission. Okay. So there are probably more than a bunch, and I'm not going to include and specify for each paying method its commissions, because A, I don't know that, and B, this is not what the question is answering. It's answering about the commissions. So from our side, from AvaTrade, we don't charge, but it depends on the paying method that you're using and may charge for the bank. All right. The last question that we have here is it possible to learn trading by yourself? Yeah, well, I guess we all know the answer for this, but still I want to see what the audience is thinking. Who thinks this is mandatory to have an outside help, and who thinks that self can also work? What do you think, guys? Is it possible to learn trading by yourself? Maybe to learn how to trade or to learn trading? What do you think? It is possible that takes more time. Okay, Phil wrote that it's possible that takes more time. Okay, I can understand. Gitsu, hi, can you edit as you're trading? I'm not sure what you mean by that. If you can explain to me, that will be great. But I'm gonna tell you guys that to learn by yourself, it is a valid possibility, and you can easily learn by yourself from thousands of videos that you can find online. You don't even have to go too far, because you can find many videos here if you click on tutorials. Okay, and then you can go scroll down and you enjoy all kind of content in here. Furthermore, you can go on to the academy and enjoy a lot of content here as well, which we're not going to review because it will consume the whole webinar. But to answer the question here, so to trade or to learn how to trade, just like anything else in life, we need energy. Sometimes we also need money. Okay, we need also time. Those are the three basic principles Okay, and we can also add here talent. Okay, but this is regardless whatever I'm doing. Okay, if I go to the gym, if I learn how to trade, if I learn how to fish or whatever you want, at the end of the day, I need those things, right? I need the talent. I don't necessarily need the talent, okay, but I need the energy, I need the money, and I need the time, okay? Now, it's true that they are free materials, and let's see if there is another question in here. If we are trading oil, if I like to increase 4.01 to 10, yeah, well, there is no there is no problem with that. You know, if you want to increase from 0.01 to zero point 0.1, right? Yeah, you can definitely do that. I'm not sure that I understand your question. If you can specify the question, that will be great. Now, as I was about to say, money is not always one of the things we need, because sometimes we get free materials, but we still need the time and the energy. This is written differently, energy, right? So, sorry, this way, right? Yeah, so you basically need those things. It's quite inevitable, right? If I don't spend any time, how will I learn? If I don't spend any energy, again, I'm not going to be able to move forward. So this is basic things, and you can also include talent. Now I'll tell you guys up front, I've learned by myself. Okay, the basics took me a lot of time and much more than time. It costed me a lot of money. A lot of money that I had to spend and try things by myself. Okay, and I've made a lot of errors in the beginning that could have turned into bad habits, and bad habits are difficult to correct later on once you have it in, because it's part of the way that you use for trading. Um, And then, of course, you want to have strong foundations. And this is why always I'm showing the slow way and the long way and not just a shortcut, because shortcut, at the end of the day, even if you do them and you make profits a few times, you don't understand the logic and it's difficult to utilize it in your own strategy. The question is, how do I increase or decrease as I'm trading live? Okay. Let me put your question down, even though I'm not really sure that I understood, but if I understood, it's not possible to do that. Okay. Now, regarding this question, just to wrap it up, to learn by yourself, it's a possibility. As I've explained, I've learned by myself, so I'm a living proof. To tell you if it's recommended when you have so much resources these days, because when I started, it was more than a decade ago. But now, when you get so much resources from AvaTrade, look how many things here. Just on the left-hand side, you have signals on the website, you have a news section, you have economic calendar to know when the events start, you have market buzz, you have a considerable amount of tools that you can just use for free and basically make progress. So to learn by yourself, yes, it is a possibility, but you can use at the same time all of the tools surrounding you to help you make more progress. Now, if you have a senior account manager, which we can assign depending on your eligibility after you've made a deposit, of course you can get personal assistance, and then you can put down a plan and construct things with much more logic, right? The other way is trading perhaps with a community or with a group, and those things can help as well, of course, if they are good. Okay, so we spoke about one way, okay, self-study, which is one way. We have trading with assistants. Okay, so both are great. Of course, if the assistance is good, like an account manager, which you know that he's a trader and is giving you strong foundations, it's great. If it's a community that you are used to, or group, or whatever you want, and there are thousands, I'm telling you guys, it's not difficult to find. You can easily find. So this also could help. But like I said, self-study is not a bad thing. It just means that you're going to spend some time and energy and money, maybe a little more than perhaps if you had information from outside to save you the trouble to find it by yourself. But overall, it's not such a bad thing. Okay, let's okay, let me just put down here the answer real quick. Let's take that. Learning. Oh, sorry. Let's put it this way. Is possible to learn how to trade by yourself. However, AvaTrade can provide a senior account manager that will that can save time, money, and energy by assisting with trading. I'm not going to specify again in what segments, because that depends on the individual and everybody has different availability, different levels. So it can't be the same for everyone. It's like a tailor suit, if it makes sense. Okay, but also by yourself is definitely a possibility. All right, now can you do, so we have finished that segment with those questions. We can get into the question from our audience. Can you do trailing stop losses? Also, can you use DTER alerting using AvaGo? Okay. About that, I'm not sure. Okay, I believe that the answer is no. About trailing stop, this is something you can do manually. Manual trailing stop. Just to explain to the audience this question, for the people who don't know what trailing stop is. Okay, so let's suppose that if I'm using the same example that we worked with until now, we have oil. Oil went down a little, well, 20 cents down. We have that bit here. Let's go $2 higher this time. Let's place it here. Okay, now what does that mean, trailing stop? It means that let's go for a sell this time. What does that mean, trailing stop? Trailing stop means that because now I'm with a sell, my profit area is down, my loss area is higher, from the understanding that we had in the beginning, there's a question here from Wilfred Chidera. What is the best broker to register with? Well, this is the best one that I have. Okay. This is a very, very nice question. I think I'm also going to paste it down. Just give me a moment. Okay, I hope that everybody sees my answers. Let's put it here. Okay. So, as I was explaining, trailing stop is where your asset has passed a certain point. Okay, you were selling. That means that you have gotten to, let's suppose, here. Okay, you've got to the white line. Now oil has reached that level. Again, hypothetically, I started selling. Okay, let's suppose that it reached 67.3. What I can do now is I can set the stop loss onto the to the entry price. So in the middle of the position running, this is when the position exists, not when I open it. I can't place it in advance. Okay, but let's suppose that I've already made some profit. And now I set the stop loss to where I started the position. Okay, and I can even set it for 67.9 or 68, let's suppose, and then the stop loss will close on a profit. Okay, let me repeat that one more time. The first stage was CL gets to 67.3. That's stage one. Okay. And the second step is I have moved whatever price I had with stop loss, or if I even maybe I didn't have it on, I can set the stop loss to a higher level, and then if it goes back against me, it's going to trigger the stop loss, but I'm going to get profit out of it instead of loss. Okay, I hope it makes sense. Now, this is not something that you can do. Okay, how do you increase or decrease MI trading? And you guys didn't see the questions beforehand, but Mengitsu asked about increasing or decreasing the lot size while the position is running, and that is not something we can do. We can get rid of units, but we cannot expand and acquire more to the same position, right? You can only do that with options, okay, to rebuy or resell, but not with the concept that we're working with right now. Okay, let's take those links and send it to you guys. This is, as I show, this is from the website, right? You don't have to use the link, but you can use the link if you're not using the web trader. This one is to log in and make a deposit if you want to do that. This is for some more official information regarding your account or whatever else you need. This one is for a real account. And that one we already saw on the website, which takes us to the academy, right? This is from the web trader. Very easy to get here. You don't have to download anything, do any installation. You just go logging to the website, click on web trader, and you're supposed to see exactly that. Okay, let me also give you the benefit, guys. There is a special promotion code. You get a benefit here. You can get one-on-one premium market review from your senior account manager. So you can give him the promotion code. And let's see how much time we have left. All right, guys, we have another 2 minutes. It seems like we concluded everything that we have been requested to. And I would like to thank you all for joining us today. It was a wonderful webinar from my end. I hope that you guys could learn some things as well from what I've explained. I hope I didn't go too fast or too slow and everything was clear. That's it. You can, like I said, watch the recorded version in our YouTube later on. Until then, I wish you all best of luck with trading. Have a fruitful week and have a good day.